Good afternoon. We welcome you to our Expert Viewpoint webinar. Today we are continuing our series on the new age of underwriting, featuring a discussion on underwriting technology and transformation. Some of you may recall FirstBest hosted an Expert Viewpoint webinar on April 15th. And if you did not get a chance to participate, the recording is available on our website now at firstbest.com. Judging by the attendance and feedback, our industry colleagues are finding both educational and prospective value in the New Age of Underwriting series. We plan to host another one of these webinars in the fall, so certainly stay tuned for advertising around that. I'm John Belizaire, CEO of FirstBest in Bedford, Massachusetts, and I'll be your moderator for today's session. I'm joined by two eminent and experienced panelists who happen to be great friends of mine. Deb Smallwood is the founder of Strategy Meets Action. SMA offers a unique blend of advisory and consulting services, research, and events to the insurance industry. Also joining us is Paul Romano, a clear industry veteran. He is the former Executive Vice President of One Beacon Insurance Group, and Paul was also the president of One Beacon Professional Insurance. As we progress through the webinar, you can post your questions online. Please post your questions in the GoToWebinar control panel. The questions area is highlighted in this slide, then click send. All incoming questions are anonymous, as a reminder. Today's program is divided into two main sections. We'll begin with an overview of industry trends around insurance technology, underwriting, and business innovation from Deb Smallwood. Then, in a break from traditional webinar presentations, I'll moderate a free-form discussion with Paul Romano and Deb on various interrelated topics on business and technology transformation in property and casualty underwriting. During this interactive segment, we will try to match up and include some of the questions from you folks, the audience, on the topics we cover. So don't forget to post your questions as I described earlier. Now, before we hear from Deb, I'd like to make a few introductory observations. It's becoming clear dedicated underwriting workstations are transforming the risk evaluation process. That's because these state-of-the-art systems let underwriters focus on the quality and consistency of underwriting at the account level and across the enterprise. In fact, modern underwriting technology also streamlines all workflows so underwriters can collaborate proficiently with producers to rapidly close business. In our experiences, commercial and specialty line underwriting are, well, special. In fact, the complexity of the products and the deep knowledge base needed to underwrite specialty and commercial lines really make them ideal candidates for modern and dedicated underwriting workstations. Clearly, underwriting profitability, agility, and service lie at the very heart of a successful specialty and commercial lines carrier. To make sound underwriting decisions in specialty and commercial lines, your underwriters need to capture as much relevant data about the risk as possible, and often far more than in standard lines. Specialty and commercial lines underwriting can require vast amounts of data from numerous third-party sources. The longer it takes your underwriters to assemble, analyze that data, the more it can cost you in both expense and potentially lost opportunities. So today's underwriting technology really is built to accommodate new and evolving data sources. It means underwriters can evaluate risk with much greater precision without losing time for searching some of that disparate risk information. They can better understand risk and make informed decisions about exposures. And more than ever, it means underwriters are much better positioned to directly contribute to profitability. Now, just as important, data-driven underwriting workstations are essential to filter out the distraction or wrong data or too much data. Keep in mind, too, that policy admin systems are typically not designed to incorporate, consume, or exploit today's range of data sources for these decision-making, especially for commercial and specialty risks. Modern underwriting workstations are really equipped to do three things really well. They can seamlessly integrate with your policy management environment. They can bring together all of the internal and external people and information in a collaborative process. And they allow these people to rapidly evaluate, quote, and win more profitable business. From the perspective of our customers, FirstBest specialty and commercial lines customers, modern underwriting workstations are actually a gateway to more profitable growth and better customer service. Now, it's my pleasure to introduce Deb Smallwood, founder of SMA. Deb will offer her insights on the new age of underwriting and what it means to modernize, optimize, and innovate effectively in support of your risk evaluation needs today and in the future. Deb, over to you.
Hello, everyone. Thank you, John, for the introduction and your insights on an underwriting workstation. It's really great to be part of the program today. For many of you that know me, this topic is absolutely near and dear to my heart. It's a vision that I've had for over 20 years and passion, focus, and drive to transform the industry and transform the underwriting process on the desktop of the underwriter. You know, just a little background, if we go back to 1989, I worked on 2 strategic initiatives at Liberty Mutual, and I can still hear the executive vice president of all of commercial lines underwriting say, I want a business reengineering project. I want to streamline the quoting process. I want to go from weeks to days, and I want to become more efficient and have better collaboration with the brokers. And at that time, we were looking at electronic folders and really looking at business reengineering. But very simple objectives. If you fast forward today, we're still trying to achieve those goals. And I believe today we finally have the suite of technologies and tools necessary to fulfill that. Back 20 plus years ago, there weren't workflows and rules engines and underwriting workstations available. And the other thing that's really important today is we have asked the underwriter, like underwriting has become so much more sophisticated. There's more tools, there's more models, there's more data, there's more spreadsheets than there were back in 1989, 1990. And it's become so complex and so cumbersome and even more manual that there's still this need. And what we're starting to see today is that it is finally resonating in the business executives that they need to do something about it. So today I'm going to share with you my perspective and some SMA research on the topic. And I challenge you all to listen and observe what I have to say, but not only in the panel, about rethinking and really think differently about the transformation of not only the underwriting process, but of the desktop of the underwriter. And hopefully at the end of this session today, we can help bring some clarity and focus to the great opportunity that's in front of us and the proven successes that we've seen in the marketplace with this technology. You know, just really quickly, John indicated that I'm the founder of Strategy Meets Action, and we love working with insurers and solution providers, really bridging that transformation and that future vision into today's world. We have a variety of services, and today I'm going to be showing you some of our insights and our research. So I'd like to start off first with the SMA Next Gen Insurer model that is really about the digital era that we live and work in. And if you look in the center, it says the next generation insurer. You know, for this presentation, let's talk about the next generation underwriter and the next generation underwriting process. And a couple of years ago, we built this model because we thought it was really important. Rather than looking internally in your processes, you really have to look outside into your company. There's a lot of change happening in the industry, and we live in this digital era. And you can see the gray arrows and the gray hammerheads. And we have 8 internal and external influencers like other industries, competition, emerging technologies, the economic climate. And they're really forcing and putting force on our industry and individual companies to really start to rethink and transform the way we do business. And the blue around is the explosion of all the data, the internal and external data, not only structured data, but unstructured data and big data that is available to us. And so when we think about the center, it's really important to understand those internal and external influencers and think about us from an underwriting perspective, how we interact with our customers. So customers can be any stakeholder. It could be someone internally. Another customer could be claims. It could be loss prevention. It could be your broker, your agent, or it could actually be the policyholder. We're going to look at the transformation and the changes of products and services, our infrastructure, and really start to think about our business models today. And given all the change that's happening around us and even within our industry, really begin to think about transforming our business models as well. So how is the industry responding? You know, out of the hundreds of slides and data points that we have at SMA, this is probably one of my favorite slides. And, you know, we've been in business for many years, and we're starting to be able to show 6-7 years worth of data and the trends that are happening. So this question is around what is your mode of operation and how are you investing in technology? And you can see back, you know, 5-6 years ago, in 2010 and 11, we were just coming out of the recession, and everyone was really investing in a sustaining mode, looking to maybe cut costs with some growth, very few transforming, so only 13%, with 4% surviving. As we move forward in the middle, you can see how sustaining started to shrink and more investments were happening around growth. But in the last 2 years, we see sustaining and growing, shrinking, and more companies transforming. And transforming can be a business transformation of claims, of underwriting. It could be policy servicing. It could be in your distribution area. It could be transforming from a data. But we're seeing more and more insurers embracing transformation. The other important number to really look at is that 11% down in surviving. Now, this is the first time in 6 years we've had double-digit surviving. And surviving is really where we can't even make investments because we're really struggling with our bottom line, our combined ratio. These are P&C companies, and we're going to continue to see it's almost like a tipping point. We're going to start to see that number go up. And technology enablement is absolutely key, and the use of data to help companies compete in today's world. So looking a little more at transformation and innovation, we ran a survey around innovation, and we asked, out of your business processes, which ones are the highest priority? Which ones are you looking to create innovation or transformation today? And underwriting was the number one. And there's a lot of modern core system implementation, but there's a lot of specific commercial lines underwriting projects that we're seeing in the state of transformation. So what do you need to do? So how do you think about this, and what is the action that you need to take? Well, our definition around innovation is to rethink, reimagine, reinvent, or redesign. It could be a role, it could be a relationship, a process, a product, or even the way you look at technology solutions. And the overall goal of innovation and transformation is really to create game-changing experiences or results for your customer, and your customer could be any internal, or it could be your agent, broker, or policyholder, and or your employee. So in the context of our conversation today I challenge you all to really begin to rethink, redesign the role of the underwriter, the technologies that you give the underwriter, and really look and rethink for your company the end-to-end process of underwriting. So you do have those game-changing results in terms of differentiation, profitability, scalability, and achieve the goals that you are looking for. So let's take it down another level. So if we're talking about underwriting and underwriter transformation, we have a slide here, and this comes from our top 10 imperatives. Every year we create the top 10 imperatives. Again, we've been doing that for about 6 years, and we've always had something about underwriting. And the top 10 imperatives are around the must-have initiatives for every single insurer. Now, they're the must-haves. They should be on your roadmap, your 3 to 5 year roadmap. They may not be something that you're investing in today, but you have to acknowledge if you don't invest in this and your competition is investing in this, what is that going to do to you, your competitive positioning, and you achieving your goals. So this year, we really focused in on very complex risk. So that middle market, national market, complex risk. Because we all know that for small commercial and for personal lines, we're pretty sophisticated as an industry for straight-through processing. Some companies are as high as 80, 90% straight-through processing, no-touch underwriting. So this is really around risk that we know the underwriter needs to underwrite. So we created 5 I's for this top 10 imperatives. And the key words are intuitive, intelligent, interconnected with information and insights. And I think it's important to step through the bullets. I usually don't like to read what is on slides, but I think it'll give you an opportunity to start to envision what it could look like. So it's an intuitive user experience. So that is anytime, anywhere, any device. So for an underwriter or someone in the underwriting department, you want them to be able to access information or access the system 24/7 on any device. So if it's an underwriter that's coming back from or sitting with a broker, that they have access to the information. And that it's a intuitive user experience. It's not a green screen. It's not a transaction system where you have to step through and enter information, that it becomes very intuitive and customized to what their needs are at that point in time. It also has configurable workflows and rules engines. So all the underwriting guidelines that are still in so many PDF forms out on internet sites, and sometimes they're even paper manuals, but it's intuitive and in an intelligent workflow. It's also interconnected, and so there's a lot of words after that interconnected, right? So the vision is an underwriting workstation that is in real time synchronized with all your other systems, and that they're all interconnected that can bring that information to the underwriter. And so it's integration, as John indicated, it's really taking an underwriting workstation and making sure that it can work with CRM and sales tools, can work with a policy admin, all the data that's captured and all the rating, and other core systems, that it can bring and automate, either replace or integrate with all the tools and spreadsheets that underwriters are keying in information. It can bring and interconnect all that internal and external data and all the sources and models, and is in a position to even think about some of the emerging technologies like Internet of Things or wearable devices like for work comp claims and work comp pricing and things like that. Also, the other big I is information and insights. So really advanced business intelligence tools that not only can show at a policy account or portfolio, it can show operational performance, it can show book of business performance, it can show the financial performance as well. And the 5 I's are really for that next generation underwriter in our digital world that we live in. So how do you solve this, right? So every year, we also have the ecosystem, which is our IT spending and business priority. And in 2005, this is January. And we asked the question, this was business applications, and the data is specific to commercial lines and specialty lines. So there's no personal lines in here or life. And we asked the question, what are your top business investments? And the orange is I'm buying or adding some new software. And the blue is I'm enhancing. And what's really fascinating for commercial lines and specialty lines is that policy admin systems is number 1, and we know that there's a big push to modernize the legacy systems. Ratings is also in there. And underwriting workstation came up as 26%. Now, this is a big jump from previous years. And what I believe, because I've been tracking this for a really long time, I think there's finally the realization For commercial line specialty business, insurers are starting to realize that they need both. And I'm going to explain to you why I think you need both. And again, it goes way, way back to my days from 1989 when we created an underwriting workstation at Liberty Mutual. We still needed our core system policy admin. In fact, in the time we had multiple. So a policy admin system, I mean, everyone knows what a policy admin system does, right? It's your transaction, it's your core system, it's your system of record. And it's that big blue box, and specific to middle market, commercial book of business, large national, and even complex specialty. On the left-hand side is really that transaction. So somehow there's a submission. Someone's captured the information either electronically or someone's keyed it in at the company, but the submission came in and there's a data validation, maybe some underwriting rules for risk appetite, and some base rating goes on. Some high-level risk analysis, maybe applying mods and discounts, some pricing, and then you have a quote. For simple risks, this is all you really need. You can see a policy admin interfaces and integrates with a lot of different data sources on the side. It could be other core systems, it could be loss control, it could be reinsurance, document management systems, workflow, and external data sources. But what happens when you have complex risks, it's that risk loss analysis where we see the majority of insurers taking that really offline and not really leveraging the policy admin because the capability is just not built out yet. So let's talk about the definition of an underwriting workstation. And what's really kind of fascinating about the name underwriting workstation is I think it really is an underwriter workstation because it's a workstation for the underwriter, the person that is doing that risk analysis. Now, underwriting workstations can be all-encompassing, but my focus and what I believe is the priority is the role of the underwriter. So with that in mind, it's really a unified, intuitive work environment that enables efficient and consistent data-driven decisioning. As I talked about in my opening remarks, there's so many tools and so many sources of new data, and there's so many new models and spreadsheets that we're pushing onto the desktop of the underwriter that you need an environment that is unified that can help the underwriter with advanced risk analysis to ultimately, which is the end goal, is to get the right price for the right risk. So some of the key capabilities, again, it interconnects and aggregates all sources of data, tools, and models. It can facilitate collaboration, workflow, and information between all, I call it here, internal and external stakeholders, which are really customers. It works in concert with a policy admin. It doesn't replace the policy admin. It works in concert, and it also can work with all other systems. And it provides a 360-degree transparency. So full visibility into portfolios, accounts, and policies. I go back to earlier days with an insurance company of the West where I was the chief transformation officer and actually implemented FirstBest. And what the business executive called it was, it's one-stop shopping for the underwriter. It's one place where they go, because just last week I was at an insurer looking at their underwriting, and sure enough, the underwriter was going out to websites, going out to internal sites, going into their own folders, pulling, grabbing, sorting, rekeying information. And it's 2015, so I think we all need to move beyond that. So the next slide is, I'm coming back to this diagram, and as we talked about the underwriting management system or the underwriting workstation on the left, it really has the capability to provide tools and insights and a platform for that risk and loss analysis, and it really can bring in all the data that's on the right-hand side. It can also do, a full underwriting management system can do everything on the left-hand side as well, and and integrate with other sources, but I really wanted to highlight the main focus. So just to conclude, what I've been talking about for the last 20 minutes is, and remember part of that innovation to rethink, redesign for game changing, it really is around profitability, profitable growth, and differentiation. And if you can control quality, and if you can control consistency in pricing, if you can control the right pricing for the right risks, if you can get your underwriter to have more time to spend on those risks and allow the ability to scale and grow your business without hiring more underwriters, it's clearly going to impact both expense and loss ratios. But I think more importantly for game changing, it really creates differentiation. In today's market, service, agility, knowledge, time that the underwriter can spend with brokers and agents on this book of business and really look like that purple apple, right, to really differentiate is absolutely going to be key. So with that, I'm ending my portion of the presentation. I'd like to turn it back over to John. Oh, I'm sorry, there's one more slide. I apologize. I can't turn it over back to John yet. So the call to action. We always love to have call to actions. This is a great quote that I've been using for the last couple of years. And what Bill Gates is saying is we overestimate the amount of change that will occur in the next 2 years, but we underestimate the change that will occur in the next 10 years. Don't lull yourself into inaction. So, there's a lot of hype around Internet of Things. There's a lot of hype around innovation. There's a lot of hype around big data. And if you go back 2 years ago, there was hype. But go back 10 years, there wasn't an iPhone, there wasn't social media, there was no Facebook, maybe just at a couple of colleges. We had paper folders. We hardly did straight-through processing in our industry. And so the pace of change just in the last 5 years. So don't even go out 10 years forward, just go out 5 years. Our world and the world around insurance is changing. So don't lull yourself into inaction. I encourage you all to really think about this and how you're going to solve and bring opportunities to underwriting. So now I will turn it over to John. All yours.
Thanks, Deb. I really appreciate the comments, and I'm glad you took the time to go through that slide. I think that's a great call to action. Your insights on this topic, underwriting trends and technology, is always instructive and certainly appreciated. Now, as you're speaking, our audience has posted a few interesting questions. I also have written down a few myself, and we'll get to those in the next segment. But just for a reminder to our audience, you can post your anonymous questions in our GoToWebinar control panel in the questions area as we're depicting here. So I'd like to move to our panel discussion section, and we're going to essentially go through a series of questions, and I've kind of broken them up into a series of topics or topical areas to kind of frame the questions I'll be asking Deb and Paul. And so the first place I'd like to start is market forces and strategic considerations, like I like to call them. Essentially, as we're talking about transformation, technology, and underwriting specifically, the question then becomes, what macro changes? Deb showed the pressures from the next gen, from the external pressures kind of shaping the next gen insurer in her presentation. The questions I have are, what other macro trends or things that are sort of happening out there? And I'd like to start with Paul. Having been in the industry, been an operator at several insurers, very successful, I wanted to ask you to follow up, I guess, on Deb's remarks and observations. And the question I would start with are we in fact in a new age of underwriting? And if so, what are the indicators in the context of business and technology transformation from your perspective?
Well, I appreciate all of the comments. This is Paul, of course, and thanks, John, for having me on. I certainly, Deb has had a long history of monitoring and developing insights into technology around the insurance and commercial lines business, and I see a lot of things very consistently with her. I think if you were to put things in context, the insurance industry has over the past decade really been forced to modernize in a number of directions, even from the standpoint of products, primarily because of the rapid change in business and the exposures that their business customers operate with, really has created a challenge for insurance organizations simply around the coverage they offer as a starting point. There have been changes in the distribution of those products with brokers and retailers and intermediaries and so forth. There have been challenges around technical consistency within the organizations, as well as service quality, consistency in the data that's being collected and used to monitor performance and manage it. So almost, I typically try to avoid the use of the term, but a bit of a perfect storm of activity in that customers' needs are changing, the methods by which business is transacted are changing, and these challenges internally to deal with continuing to modernize where it involves significant investment to get that done. So there's quite a bit of challenges out there, and we're also operating in a merger and acquisition environment. In fact, I think of this as an era of scale in the insurance industry that we're passing through, not unlike the airline industry, not unlike the healthcare industry, diversification of investment, and the globalness of the business. You hear about recent acquisitions by Chinese companies in the U.S., which hadn't been the case previously. So there are a lot of contextual dynamics putting pressure on the business. And then you get to the very practical level of what underwriters do every day, what the pricing levels are in the market, and the challenges that come with what has been a prolonged soft market environment, and the lack of investment income for the insurance companies. Lots of pressure points that are driving the scale issues, that are driving the need for productivity and efficiency gains, and not losing sight of the fact that the technical integrity of the work that's getting done and the service provided to distributors has to be competitively superior with the amount of capacity in the market. So there's just a lot that companies need to deal with, and if you look inside each one of them, I would think they're dealing generally with the same topics, but they're dealing with them in different ways because their own organizations have evolved to be better or worse at certain of those things, and they're after them.
I appreciate that, Paul. It's a great, sort of overview. It's interesting you made the comment around new coverage types, and I assume you're including new insurance products in there. I was wondering, Deb, from your perspective, are you seeing out there, obviously among the numerous changes that Paul touched on, but insurance products themselves, or insurance companies beginning to change their perspective on what they offer, how they distribute that, and what the velocity of their operation and what requirements are tied to that look like in the marketplace? Is all of this sort of changing in the industry as well?
Yeah, it's absolutely changing. It's not the same industry that we lived in even just 5 years ago, but the changes are small, they're subtle, they're very deliberate. There's nothing quantum, but when you look at it's almost like 1,000 cuts, death by 1,000 cuts. It's a lot of little things that collectively start to build momentum in a paradigm shift. For example, P&C companies now, very similar to what life has always been, it is all around the product. So here's an example, and it's mostly There's some in the commercial space, but we see trends starting in personal lines, and then they swing over to commercial lines. For example, for P&C and even life products, we're starting to see the use of sensors, right? Sensors in homes and cars and life. And right now, the simple product changes are discounts, but they're embracing some of the new technologies and starting to adjust or even adjust their products with cyber risk. We're starting to see the distribution channels become more like omni-channel and be able to create platforms to be able to take submissions in new business from self-service, from any kind of channel. Just for example, Google Compare in personal auto in California, right? So that's a shift. And also seeing many, many transformation projects around operational efficiency and underwriting and policy servicing. But I think the other underlying theme through all of this, which is so critical to the underwriter and the underwriting department, is the lens is flipping. And it's flipping to customer experience and customer engagement. Instead of looking internally at products, they're looking at what the demand is from the customers in their relationships and investing that way.
Got it. You know, it's interesting. You alluded to cyber. That seems to be really taking off over the last few years. You know, it's a product. It's coverage for something that isn't a thing, as we've seen in the past. But it does relate to an event that does cause loss in all different ways. What's your perspective on, and this one, I'll throw this to Paul. What's your perspective, Paul, on how this type of insurance coverage is going to change the industry? And is there anything else that's kind of brewing that looks like that, like cyber?
It may be a little soon to think about something that looks like cyber, since we haven't really circled completely in on really what's transpired in the environment, the business environment, since the early hacking claims in 2013 and 14. My sense of things with cyber is that it's a coverage that's been in existence for some time. It's really the environment that shifted over the last couple of years and added to the potential for loss, both from an information security standpoint and a hacking standpoint. And it's become quite a challenge because insurers are dealing with a need in the marketplace, probably a more significant need than some of the core liability coverages that their clients had been buying historically, and a need to attempt to solve for that in offering of their products and at certain prices and with other terms and conditions. But it becomes challenging when all of the information to gain some certainty around what it is you're underwriting and how you can go about doing it profitably. And I think certainly the carriers that have been in this for 12, 15 years have a good track to run on in evolving what they've been doing, but a lot of new entrants have also come into play and are challenged by the pace at which the exposure side of this is moving. And all in all, it's the exciting part of what the insurance industry does, even though it gives underwriters gray hair and a lot of angst to try to sort it through. So I see it as a marketplace opportunity for the insurance industry. I see it as one that will begin to clear sort of a better look inside all the important aspects of cyber exposure in the next 18 or 24 months, maybe a little longer, maybe a little less. But there's these kinds of needs by clients are what the insurance industry exists to do, and completely shying away from it seems inconsistent with what our purpose is. But going headlong also is a bit irresponsible. So that there's a need for a very clear strategy, very clear understanding of a company's appetite, and a very deliberate implementation of their approach. And to tie this back to the topic of the conversation, the ability to collect a very fine level of data and achieve that technical consistency and allow companies to look at the experience at a level that gives them better insights are a big part of why these front-end underwriting workstations become of value. They're capable of collecting and synthesizing more information than has existed before, and may be helpful in the profitability work, analysis, and decision-making that goes on in the chief underwriting office of the insurance companies that are involved in it.
I appreciate that, Paul. Excellent. Thank you. I want to stay with you for a minute and get your thoughts on all the M&A that's been happening. You touched on that when you were talking about the perfect storm. You know, we've seen Axis, PartnerRe, Chubb, Ace, Fosun, as you hinted to. You know, Chinese company acquiring Insurers, Tokyo. You know, multinational company, Japan-based buying a U.S.-based company with operations in the U.K. Taurus, XL Catlin. You know, what do you think this means for the industry? I mean, is this activity going to increase competition, lessen it? Is there going to be more product innovation? And what platform or technology expectations does this type of activity set from your perspective?
Well, you know, I think it's awesome stuff. An industry that had been a lot quieter in its history is really in the center of an enormous amount of M&A activity. You know, much of it will go well, some of it may not go well, but as I said earlier, the era of scale is underway, and I compare it in a very distant but simple way to, you know, Obamacare drove healthcare system consolidation because you can't make the financial metrics without real economies of scale. And I think there's a view, particularly in the larger insurance company environment, that bigger is better, and that these acquisitions and mergers are going to improve the ability of the insurance companies to do the business more efficiently. Now, keep in mind that there's really practical pressures on those companies before they're doing these deals. They've had low investment income. The results they desire for their company have been challenging to achieve because of investment income, a softer market cycle holding for some time. So these scale moves provide them an opportunity to compete more effectively under not the most optimal environmental circumstances. And we've seen cycles of this in the past. There seems to be quite a rash of them right now, but they're intended to improve what's provided to the customers and the results that they can get for their shareholders or other stakeholders. And you know, it's yet to be seen whether this volume of activity will produce the kind of success that's intended, but certainly the investors that are making those deals feel that they will, and only time will tell whether that's the case. But it will push. I don't know that it'll necessarily push innovation in product, although some of those companies may take on that as a strategic differentiator. I think really what it's going to go after is scale and price.
Got it. And do you think there'll be any specific technology expectations set for these companies post-merger, or do you think it'll be just more technology, you know, in a bigger company sort of thing?
I think all of these companies understand the importance of the important role technology plays in facilitating a lot of things, whether it's productivity, service, customer experience, technical consistency. All those things are terribly important to them. They're all dealing with them in different ways and at different progressions. What's interesting to me is that, you know, you would think that the largest of the organizations have the resources to deal with modernization, technology modernization, and differentiating on a facilitating technology platform or enabling technology platform, and they do. The challenge for them is really, particularly those going through the M&A process, are priorities and harnessing their organization around getting those things done. So the innovation still seems to be happening in the small middle market environment in a broader way. The big companies have certainly innovated around predictive models and taken pieces of the process and made them better with technology and focused investment. But I think when you view this through the lens of differentiation, it's the small middle market companies that think they can more nimbly move about and get those things done to compete with those larger companies and try to outleg them, not with scale, but with methods of creating better customer experience and better results. So there's a bit of a conflict in there, in that I think it's the small middle market companies that are still spending the time and money to try to differentiate through innovation.
Got it. Thank you. I'd like to I thank you both for that commentary. Very insightful. I want to move to business pain. There's certainly a lot of it out there. It differs from company to company, and I guess I want to start with what we think the key pain points are for specialty and commercial lines companies, especially the underwriting teams, and how we think technology might help. So the question really goes to you, Deb. What do you see are those key pain points for commercial and specialty lines underwriting teams, and how do you think technology can help? Paul touched on some of those, right? So the abundance of data and managing that. What else would you add to that?
It still takes a long time. So end-to-end process is not minutes or hours. It's still days and possibly weeks. There's still a lot of manual handoffs and back and forth between agent and underwriter and within the underwriting department. And there's still a lot of rekeying information. There's the lack of consistency and automating some of the guidelines so you have consistency. A lot of the referrals are manual. So there's still a lot of manual interaction, even with a core system or a modern core system as well. So it's time to market, it's agility, it's lack of information. It's all the things that we've been talking about.
Yeah. And it probably starts with, we have our first question actually coming from the audience. I think it fits nicely in here. Paul, let's try this one on you. It's basically looking for some advice around how insurers, the question is, what advice would you give insurers who are looking to evaluate their underwriting operations? So I guess if you tie it back to what Deb said, right? So there's lots of challenges. It's too slow. They're running into issues. How would you do a self-evaluation? And once you've done that, what barriers would insurers face in deploying technology to help address what they find in that evaluation?
Right. That's a great question. My initial instinct when I heard you say the question was, the forensic review isn't easy to do without context. So I think it's important to get baseline productivity, baseline metrics in place around the productivity and service of the organization. I think the hard work of understanding the workflows in the organization and the job designs has to occur. And once you get that baseline insight, you've got to monitor it for a little while and begin to understand what's changed in an organization over time. And I was going to comment on this, but I'll change it a little bit here to fit it into the answer to this question. And that is, when the underwriting community is being asked in a more challenging environment to look at more things to make better underwriting judgments. Over time we've always said you can't write something that you can't see the bottom of, and it's getting harder and harder. with the complexities of the organizations we try to insure to do that. And so asking an underwriter who was doing data input, reading the submission, and beginning to gather information with which to make judgments about risk, now we say, you know what, we need more information about that potential risk. Go out and do a deep web search and analyze all that and bring that into your risk evaluation. And now we want you to run a predictive model, not just re-rating methodologies that we have in place. So we continue to add complexity to the underwriting job that impacts that productivity that you're measuring. It impacts the efficiency of the organization and really begins to change the nature of how much time an underwriter has to really understand and collect consistently the information you need to look back on the process and aggregate information and make better judgments about risk. So to me, it's you've got to get the baseline in, and then you have to begin to understand what you're asking of underwriters that didn't exist before, and start to make some judgments about how workflow has to change and what technology tools you need to facilitate the things you're asking.
Got it. No, that certainly makes sense. I mean, when we get out there, certainly introducing our technology to potential customers, we find that many times they haven't done that baselining. So I thought that was a good question. Deb, what's your perspective?
You know, I think Paul really nailed it. So it's really important to look at the productivity and the metrics and look at the workflow and look at the handoffs and look at where the pain and the time and the time being spent on non-value added tasks, right? So, and I think it's important to really understand what your business objectives are, and then collectively look to see, do I need to replace my policy admin, which is going to give me end-to-end, but not that deep detail underwriter risk analysis, or do I need to focus my investments on that area? And so you can't default to, oh, just because it's a legacy and difficult to maintain and I can't get products in for my policy admin. You've got to really look at your business operations, as Paul said, and really hone in on, if I fix this, will it help me accomplish what I want to do with my business objective?
Beautiful. Why don't we move on? If we have time, we'll come back to this topic. But you know, pain points are certainly an interesting topic. I'd like to move on to data and analytics. So thank you for both of your comments there. You know, Deb, you talked about the hype. There's definitely a lot of hype around this Internet of Things, third-party data, big data, web data, all kinds of data. Paul used tidal wave. I like to use Paul used perfect storm. I'd like to use tidal wave for this discussion. You know, there's just a tremendous amount of it coming at us. You know, Paul, starting with you, you know, how important is this stuff in modern underwriting? Is it that important?
I think so. If you and I say I think so jokingly because it absolutely is, but the notion that you can gain finer insights into a portfolio of business that would allow you to better target where you write business, how you write business, what price you write it at, what terms and conditions you put on it, can only make an underwriting organization better. And those practices have existed forever, right? Everyone's trying to understand what I wrote, what was the outcome, how do I use that as a basis for predicting what to do next and get the most profitable business I can together. We're reaching an era now where the ability to consolidate enormous amounts of data and learn from them in a much more significant way is just the next evolution of how do you have more insight than the underwriters you compete with in order to target, select, and write the best business and produce the best result, which in the end is the game, right? So yeah. I've seen some great things happen, maybe in isolated places in the process, but great success in actuarial insights, great success in gathering large bodies of data. I still struggle with big data in underwriting. I don't struggle with big data in marketing, and I don't struggle with big data potentially in claims. But the whole notion of creating a larger context and using that as a basis for making better judgments is part and parcel of what the business has done forever. We just have more sophisticated tools and an ability to gather larger bodies of data to make those judgments today.
Yeah. No, that's
not easy to get it done. It's not easy to get it done, by the way, but
right.
it is the next frontier of how do you beat the guys you compete with?
Right.
That's what underwriting leaders are hired to do.
Absolutely. Thanks, Paul. Deb, you're out there talking to carriers. Do they believe data and analytics can really help them? And if so, why? Why are they in belief or disbelief?
You know, it was the way Paul responded, I think so, right? So I think
right.
fundamentally the insurance industry said we've been using data as an industry from way back in time, right? We were the first to really start to use data and analytics. I think executives understand the value, and it's twofold. One is I don't think we as an industry really understand the cultural challenges or the cultural changes that it takes, or the investment in people, training, process, and data. So it's like, sure, let's embrace all the new sources and models, right? But then there's a cultural and lack of talent, just especially for mid-size, they don't have the people. And I think the bottom line is it will take time. We're very immature as an industry using new sources of data, and insurers are risk adverse. So it's going to take a lot of playing around and testing and validating and proving that the new sources of data will create better pricing and better decisioning. And I think many companies are doing that, but it's time consuming, it's somewhat overwhelming. There's so many news sources that are coming out there. And if it's incomplete or not 100% or 90% accurate, I think the whole notion of big data is around more incomplete, more sources bringing it together, and we're right at the beginning point of that.
Thanks, Deb. In fact, there was a question that came in from the audience around that, around data quality and integrity and sort of filling in the holes. And would you say that that's how we should begin, that's how we should think about it, right? Using as much of these data sources to improve the quality of the information we use to make underwriting decisions.
Yeah, you know, I think the area that there's amazing amount of new kinds of data is around property, so large property, all kinds of risk data, location data. We're using some of it, work comp. There's all kinds of new sources of data as well, or automobile.
Well, I'm going to move us along just to keep us close to our time here. Let's talk a little bit about integration. I'll just do one question here. Let's see. I can choose between one of my questions or the audience question here. Let's see. Let's start with the audience question. So what are your observations around integrating underwriting technology with the rest of IT, right? So integration is about integrating new things to what you have now and integrating what you have now together to deliver greater value. I like this question because it's talking about something new getting added to what you have today. What's the most difficult part about it, and how would you approach it? You go first, Deb.
Sure. When you think about underwriting solutions, underwriting workstations in concert, not only with the policy admin, but all the data sources, right? It really requires a concept of not having point-to-point integration, but having more of a data hub and being able to reuse a lot of the integration points. Because at the end of the day, the integration, it's difficult not because it's hard from a technology, but it takes time and it costs money for all the data mapping. So whatever you can do to reuse things, get you halfway there. So, I think companies really need to invest in and make sure that they have the right insurance data subject matter expert on the team. That's absolutely critical.
Excellent. Paul, any comments on this one?
Yeah, time and money are pretty important parts of the challenge. I also agree with Deb that taking a step back and understanding the foundational challenges that facilitate not just the first project, but what might evolve from there is very important. Because if you go in as a one-project approach, you often end up having to redo a lot of downstream or related work once you decide you want to keep going with things. So I think it's worth evaluating the best way to prepare the existing foundation for the changes that you're looking for, and really have a lot of discipline around this. What I would say is that if you look at history, companies either grudgingly came along or excitedly adopted innovation. If you look out over a longer time span, they both probably ended up in about the same place after 10, 12, 15 years, because industry will drag you to modernization whether you like it or not. And so this notion of consciously making choices and proactively building out an infrastructure that the world's going to require of these organizations in the next 10 years seems to be a more deliberate and sensible way to use other people's money.
And John, before we move on, I don't know if we're going to cover this, and I think it's an important point. So just in the last couple of years, there's been technology advances, and it's called, for all you non-IT folks on the line, it's a RESTful API. And so this is really integration. If you think about an underwriting solution in a policy admin or with a portal, it is now allowing in real time for one system to use what I'll call the rules, the rates, the guts, all that IP, so underwriting rules, maybe forms in real time. So with the advancements of RESTful API, we're seeing integration and a lot of development time actually significantly reduce because you don't have to replicate and you don't have to move data back and forth. You can use the tools. So I just wanted to bring that up as a point as we talk about integration.
Thanks, Deb. I appreciate that. In fact, it's very much the approach that we believe in, are pushing for in the way we integrate our solutions. So that's very helpful. I wanted to note to our audience that we're just slightly over our time, but if you'd like to hang in there for a few minutes, I think there are a couple of great additional topics and questions I'd like to pose to Paul and Deb. And I don't think we'll go much further beyond our scheduled time, but trust me, I think it'll be worth it if you can stick around. If you can't, we will be sharing the recording of this with everyone, so definitely be on the lookout for that, and we'll get that out to you as soon as possible. Paul and Deb, let's talk about producers and distribution. There's one key question I want to talk about, and that is technology that faces the distribution channel, particularly insurance portals and portal solutions. What's your perspective, Paul, starting with you, on what role these solutions play? Do they play a strong role in specialty underwriting or specialty insurance these days?
I think they can, and they're increasing. But if you were to put it in percentages, maybe influencing 20% of the business in premium equivalent, probably higher in policy counts. So the connectivity and facilitation of process do have value in specialty areas, and it's progressing, but it's progressing more in the small business end of things. as we get into the risk management end of the business, there's progress there too, but I wouldn't say that we've changed the means by which we do business with brokers yet.
Got it. And Deb, do you think there's a best way or a best practice for encouraging agents or brokers in implementation of portal technology, I guess for commercial lines or specialty where you've seen it?
Right. So if you're going to make an investment and it's going to have some type of impact, either in workflow or in anything, you absolutely have to get the agent broker involved upfront, right from the beginning, and establish a formal communication plan. Initially, you need to really gather their input and feedback in terms of pain points and what they're looking for, and how you position yourselves against your competition and what's going to make you differentiate and rise to the top, right? And then you have to be really, really clear with them what you will be doing and what you won't be doing, and manage expectations, keep them informed along the way, and then find your raving fan, right? Find the champions in the agent broker markets that you can actually pilot and roll out with those raving fans first. And we've seen this just work, time after time. It's all about communication and getting them involved.
Super. Okay, so I'd like to touch on we've touched on a lot of these topics along the way that I had kind of laid out. I'd like to jump to ROI and results. So there's investment and there's continued investment, and then eventually we have to get to payback. Any thoughts on the types of metrics or drivers that one should expect when they look for payback on investment of this type of technology? Some of the things we've seen are efficiency, turnaround time, projected premium growth, etc. Paul, would you mind fielding this one first?
No, the ones you mentioned are obviously the baseline that if they can be set before you start the project, you have a better reference point for knowing what impact you're having. But something as interesting as acquisition cost comes into play. If you can make it that much more efficient to do business with you, is there an opportunity for negotiation around the acquisition cost or the commission that's being paid on the account? Obviously a controversial topic, but if you were good enough, you might have the courage to ask that question.
Right.
And I think there's some value to the quality of data that's being collected. Method for assessing that or trying to measure it becomes a bit of a challenge. But I think the main thing in my mind is to sit down and stake out the key points, not that you can measure today, but that you believe are inherently important to understanding the value of the investment. Even if you can't collect it today, you ought to make sure you know it and continue to work on trying to collect it, because at some point in the process it becomes very important to be able to demonstrate value, typically because the return on investment, it may even be on time, but it's always longer than anyone wants it to be, and impatience begins to impact support for these kinds of projects. So I think it's incredibly important to lay down that track early.
Thank you. Deb, what's your thoughts on that?
Paul's again right on point. The other metric that I might add to that is really that ratio of quote to underwriter or policy to underwriter, because ultimately, if you can start to create more efficiency and more time, in theory, the underwriter should be able to handle a bigger book of business. So really understanding that will drive efficiencies. What we've seen in a lot of ROI and business cases, sometimes it's very difficult to show an expense ratio reduction, especially for smaller companies when there's less than 100 or less than 50 underwriters. It's not going to move the needle that much. And the other one is a loss ratio, and that one's tough, right? Because if the company is setting the wrong guidelines or if the market turns soft, there's so many other influencers. So I think you go to the workflow, as Paul was saying, some of those acquisition costs and quote the numbers to underwriter ratio, and maybe even submissions and hit ratios, and seeing if you're winning more business and if your renewals go up. So some sound things like that.
Just takes time.
Beautiful.
Yeah. Right.
Beautiful. All right, my last question for both of you. I call it the road ahead question. Paul, this one's for you. If you were a startup insurance company, what would be your primary focus today?
Ooh, I don't know. I may be giving away things that are pretty important to me. My view is number one, understanding the client base that you're going after, and aligning the work you do to recognize that we're part of a supply chain that passes through that broker. So you need provocative products, you need clear and very niche focused coverages, and experts on the underwriting end of things who give brokers comfort that when they place business with your organization, that they're going to get what they expected. I think expectations and the experience of the broker are a very important part of getting what ultimately is the most important thing, and that is the kind of returns that make a business worth continuing to have investors support it.
Fantastic. Deb, road ahead question for you. If you could change one thing in our industry, what would it be?
You know, that's a really great question, and I guess I have to go back to just something that I believe is absolutely critical and always have, and I think it's helped me in my career, is I'd remove the wall between business and IT. That I would encourage all business executives to really embrace an active role in technology decisions and investments. In today's world, data and technology is so interwoven into the fabric of our business processes, right? So it's not about business saying, I want this, and throwing it over the wall to IT. And then IT needs to work with the business. IT needs to not only have their objectives from a technology perspective, but they really need to come together. And when I see companies and they really come together in a unified one, magic happens and success. So that's what I would change.
Thank you. Both great answers from the two of you. Of course, that's all the time we have. In fact, we've gone over our time for today's webinar. And I hope you agree that this has been informative and an enlightening session on both business and technology trends in the new age of underwriting. I'd like to thank our expert panelists, Deb Smallwood and Paul Romano, for their insights and wisdom and beautiful answers. And our thanks to you, our industry audience, and special thanks to folks who hung in there past our time and for taking the time today to join us today. So have a great day.